how are you everyone? Welcome to the module Marketing of Financial Services. We'll start on by looking at the introduction to financial services, whereby we'll be basically looking at the definition of a financial service. We'll also look at the suppliers, we'll also look at the buyers, as well as what are the main characteristics of financial services, as well as the marketing duties of financial services providers. So let's start on by looking at the definition of a financial service. So what is a financial service? Basically, according to Maiden 2016, it defined a financial service as activities, benefits and satisfaction connected with the sale of money that offer to users and customers financial related value. So from this definition, there are three main highlights where we are looking at what we call satisfaction, financial related gain, and users and customers. So what is satisfaction? Satisfaction basically refers to the fulfillment of a certain need derived from using a particular financial services. So we are saying for the financial services provide that fulfillment to the customers of that particular service. We also have to look at financial related gain. So for a financial services to derive benefits and satisfaction, it should provide a financial related value. This financial related value is just like a gain a customer derive from using that particular service. For example, the gain that is obtained from using a savings account provided by a commercial bank. There is also the users of financial services. Basically, these are the consumers or the customers of financial services. Financial services can also be simply defined in the context of those instruments that are used to save, invest, and get insurance and mortgage. We all know that saving is just like putting aside money for future use, and investment also is just like putting aside money, but not for future use, but basically with the aim of getting a return instead of a profit or a benefit. Also, we have insurance companies, or insurance basically is it covers risks or the risk of unforeseeable events, and mortgage is just like a loan obtained in order to purchase a home or a house. Well, let's go on to look at the suppliers of financial services. These basically are those institutions that provide financial services to the customers. We have banks. In the example of in the context of Botswana, we have a lot of banks which can come into mind, which can be commercial banks. We can look at the Bank of Baroda, for example, and insurance companies. These offer covers against various risks like death, theft. They also insure against losses. We can look at a company like Botswana Life providing those services. Also have building societies. These basically, they have traditionally been created to provide loans to buy properties like houses, business premises and stuff like that. So in Botswana we have Botswana Building Society. We also have credit card users or credit card issuers. These credit cards, they are given to customers to actually buy things or buy goods and services on credit and then repay back at a future point in time. Some notable examples are Visa, MasterCard, and Amex. These are also available in Botswana, but basically they are from America and Europe. We also have stock exchanges. Stock exchanges, that is where public listed companies are listed. We have an example in Botswana. We have Botswana Stock Exchange, where companies like Mascom they trade their shares, and also we have companies like Choppies. They're also listed on the Botswana Stock Exchange, whereby investors can buy and sell shares with the aim of making a return. Factoring and leasing companies. These are companies that buy, balance sheet assets like receivables for a discount, so that companies with those receivables can get money now for working capital needs. We also have unity trust. These are basically the collectors of funds from individual investors. Then they put them into a pool, and then they give investors share certificates as part ownership in that investment trust. We also have an example of a unit trust. We can look at Stanley Botswana. Okay, now let's move on to the customers of financial services. The customers of financial services, actually these are users of the financial services provided by the basic suppliers of financial services we have mentioned. We can look at retail customers. These use personal or retail banking services provided by various financial institutions. This also applies to insurance companies. They can offer personal insurance or retail insurance or company insurance. We also have affluent retail customers. These are basically rich customers that want to be provided with private banking or personal banking on their individual basis. Corporate customers, these are companies which use various services provided by various financial services providers. We also have the private sector. Those companies that are privately listed can also need the services of financial services providers. We have a business from the public sector. These basically are government companies. You can take of ministries. You can take of Ministry of Health, Ministry of Finance, and stuff like that. They also have get services from the financial services providers, and then also you have non-profit organizations. Here we can talk of churches. You can talk of various NGO, not-for-profit organizations like Doctors Without Boundaries and stuff like that. Then also you have financial services providers, is an insurance company, or can be insurance with another insurance company against contingencies. This is culturally called reinsurance when you look into insurance in detail. Okay, so let's move on to the range of financial services that are provided by financial services providers. We also have here where we'll be looking at money transmission services, whereby an individual or a corporate customer can open a current standard current account, for example, in order to transact or in order to move funds from one account to another, or to pay for different services. We also have mortgages. These are basically loans to purchase properties or houses. We have fixed rate mortgages, whereby the rate is fixed when the mortgage is taken out, or there's also a flexible or a changing rate mortgage, whereby the mortgage provider will actually fix the mortgage rate according to a certain rate. For example, the LIBOR from Britain. That is another example of a floating rate mechanism. Personal lending, whereby people get overdrafts from banks. Also, you have savings, safe deposit boxes provided by various financial services providers. Banks give their customers safes to put valuables like gold rings, expensive watches, and stuff like that. Those are part of the financial services. Also, you have investment, whereby we are saying someone can invest in an equity portfolio, buy equities or shares from various companies listed on from a stock exchange, and then put them into portfolios. From a portfolio is just a group of assets from different sectors. Also, you have insurance, whereby we are talking about we are just insuring ourselves against unforeseen events. We can take health insurance, for example, so that when we get ill, the insurance will cover for us. We can also have we can insure against theft, our property against theft, against other natural disasters like fire. We can also insure. We can also have property insurance, whereby we are insuring our various properties against unforeseen events. Well, let's look at the applicability of the four characteristics of services. Into financial services applicability. Basically, there are four distinct characteristics of financial services, which are intangibility, heterogeneity, perishability, and focus on quality. Let's start on by looking at intangibility. If something is intangible, we are basically saying it cannot be touched. You cannot touch a service. You cannot say, I have touched the service that I have received from a bank customer, for example. So most financial services, if not all, they are intangible. So if that implies that we cannot separate the production and consumption of that particular service. If you go to an ATM, for example, to make a deposit or a withdrawal, it is unclear which is the characteristics of the nature of the land, whether you are in the production or in the consumption, because the ATM also is able to receive, that is the production, and also to issue a cash, that is the consumption of the financial service. So it is very difficult to separate the production and consumption of a financial service. We can also look at another characteristic, which is heterogeneity. Heterogeneity, if something is heterogeneous, it means that it have got many different characteristics. So we are saying that because the financial services are provided by human beings with different characteristics. You cannot say the person who serves you at the inquiries desk of a bank, for example, have different characteristics from the one who is going to give you money at the counter, for example. So that is where the heterogeneity comes into play. So we are saying that heterogeneity is whereby we are saying the characteristics of a financial service varies depending on who is issuing that particular financial service. So here an example we can give of is a bank teller is likely to have exhibit a different degree of courtesy to customers at two different points of time during the day. Yeah, you can find that the same customer who is serving you now, maybe in the morning, if you come back maybe in the afternoon, the courtesy you receive from that same bank teller might be different because of various characteristics, various factors. For example, fatigue can come into play. So that is where heterogeneity can always come into play. So we also look at the other term of the other characteristic of financial services, which is perishability. If something is perishable, we're basically saying it does not last. You can take, for example, for a common product that is perishable, newspapers. Most newspapers, they last only for a day, so they are classified as being perishable. So if financial services, in their nature, they are perishable, in that the profitability of a certain financial service is very much time dependent. It depends on time. Okay, so we can take for example of building societies are seeking to find new home buyers when prices in the housing market is going up. The prices of houses in the home market are going up at that particular point in time, and the building societies need to capitalize on that rise in the prices so they can cash in the profit. Otherwise, the prices might go down at 2 weeks from that point in time, to the extent that that profit may be not be able to be achieved anymore. That is where perishability comes into play. Now let's look at how does the adoption of marketing improve the practice of financial services institution. We are basically saying that because financial services providers, our insurance companies, our banks, our finance houses, our unity trust, when they adopt or when they use marketing of financial services, how do this improve their practice? Okay, so we are saying this basically because of marketing, the financial services will focus more on quality. That is, they are providing a better product or a service to the customers. So how do they focus on the quality? They focus on building strong relationship with the existing customers. They can also use market-oriented approaches to recruit new customers. To get new customers, they have to focus on the market-oriented approach. When we are saying the market-oriented approach, we are saying that we are using approaches that can be accepted by the market at that particular point in time in order to have new customers. So they can also use what is called internal marketing, or they are trying to focus more on training their employees in marketing so that they can provide quality services to their customers. Okay, we can also look at another marketing strategy that can be used by the financial services institution is effective management of financial services tangibilization. What we are basically saying is, isn't that we said most financial services are intangible, but the end product or the customers can only talk about a certain financial service providers depending on their experience with that certain financial services providers. That is where tangibilization comes into place. What they talk about after experiencing the service of that financial services provider, that is where tangibilization takes into place. So effective management can be a physical evidence to the other customers, and the word of mouth can play a very important role whereby the existing customers can talk about their experience with a certain financial services provider. Okay, let's look at the marketing tasks in the financial institution. So what are the tasks that are related to marketing that financial services institutions practice? We have one most important task, marketing task in financial service institution is understanding of the markets. So in order to provide a service, the financial services providers need to understand the market first. Why do they need to understand the market? They need to understand the market so that they can provide a tailor-made service that is suitable for that market and that can be fit for that market so that it can be purchased or it can be sold to that particular market segment. This understanding market can also entail that identifying also the market segments. A same market can be divided into different segments or different parts. For example, you can go to a certain market is divided into the working class and the non-working class, or a certain market there is a market, there are farmer segments who need particular services that is or that is basically suited to their activities. So that is that identifying market segment also work hand in hand in understanding the customer behavior. This will actually be made possible by doing market research, by whereby we are saying the marketing that particular financial services institution is collecting information, then analyzing and interpreting it, that customer related information in order to implement financial marketing strategy. So we have there is also need for continuous evaluation of the composition of a service range. We are saying here basically where we are saying that marketing is a continuous process. It's always evolving to the extent that there is need for continuous evaluation so that the products and services will move in tandem with the current trends in the marketing environment. Okay, we also have to look at after the financial services institution have done market research, for example, they also need to determine a number of issues, including the number of branches to set in that particular market, designing blueprints for face-to-face delivery of the financial services, and also coming up with alternative methods of service delivery. E.g., we can also look at a transaction through the telephone or internet banking, for example, or mobile banking. That is part of the alternative methods that can be used in order to deliver a financial service. Okay, so let's end this current session by looking at a practice question, whereby you should research on the following questions, where we are saying identify 3 sources of change in the financial services markets in the context of Botswana. As I have already highlighted that marketing is always evolving. So there are then if marketing is always changing, or the markets are always changing, or the consumer needs are always changing, there is about to come a change. So we need to see what are the sources or what are the causes of such change of our financial services markets in the context of Botswana. Thank you very much. Have a good day.